top picks. We are talking retail stocks today. Our guest says Lululemon is one of his favorites. He sees strong momentum in China continuing for Lulu, and Mexico could be a growth market too. We're joined by Zachary Warring, equity research analyst at CFRA. Zachary, great to see you as ever. Thank you for joining us. Lulu, interestingly, sells virtually all its stuff directly to the public, and I suppose that means good margins and other things.
Yeah, they're kind of the leader in direct-to-consumer. You know, they were the first to really have a full direct-to-consumer in terms of retail. And they've done, a great job of executing on their growth strategy over the years. Almost every quarter they beat earnings. And, typically it's fueled by China and the international market. Obviously, North America has gotten a little more stagnant. They've seen their growth slow there, a little bit of saturation. And we think China is their next growth market.
Or Mexico is, rather. Or
both. They're obviously growing. They're growing in China. Yeah, that's correct. They're growing in China right now. We think that'll continue, 30 plus, 40 plus %. And then in Mexico, they've just kind of entered Mexico. So it'll be interesting to see how they start reporting those numbers.
There have been fears about nimble, smaller competitors, but do you think that may be overblown?
Yeah, they do have competition. There have been some, new brands that you've seen on social media, I'm sure, that have entered the market at the same kind of price points as Lulu. But we do think Lulu's got, somewhat of a cult following. We think it still resonates with consumers, especially younger generations. And we do think, some of this is overblown. There's a lot of value in shares here. They're trading at about 20 to 21 times forward earnings. And typically, Lulu is traded above 30 times forward earnings. Now, we don't think, the company is deserving of that multiple anymore. They were growing significantly, higher when they had that multiple. But we do expect the company to continue to grow. And we think, mid-20s forward multiple is pretty fair for the company.
Your next idea is Abercrombie and Fitch, legendary name. They've left those years of racy advertising behind them. I think they were famed for that once. But what do you like about Abercrombie?
Yeah, they seem to be able to capture the younger generation through a little bit of nostalgia in the the early 2000s trends, and they're doing it through social media marketing. There are these grassroots campaigns where, they pay social media influencers to pitch their products, and they give them a percentage of sales for the people who use their links. And it's worked really well, so well that other competitors have caught on, and they're starting to do similar marketing strategies. And we just think they're the leader, and they'll continue to be successful. They've seen, growth reaccelerate over the last 3 years, 15% growth. Their margins are improving. And now they trade at a significant discount to their forward previous forward multiple. They're trading at like 7 times forward earnings compared to about 15 normally. So they have little exposure to China manufacturing. So there's really little risk in shares right now.
Your final idea is Crocs. Now, you're not looking for massive revenue growth, only about 1% this year. What attracts you to the stock, though?
Yeah, I think it's valuation here. Crocs has got the best margins in the business, and it's obviously how they manufacture their product. They're rubber, casual footwear instead of your typical sneakers. And so I think manufacturing and operating margins give them a lot of room for tariffs. So if there are tariffs, I think that their margins will hold up okay, just because they already have best-in-class margins. And I do think a lot of the tariff headlines are a little overblown. I think we'll get some sort of resolution that's better than kind of what we've seen in the past few months. And, Crocs shares are extremely cheap right now. And we think they're, the brand that they just acquired, Hey Dude, is troughing right now. We think Hey Dude will turn around in the second half of this year. And then, that'll add to some of the growth story at Crocs.
Hey Dude, I'm just looking at the website. It says Dad was right. Are they kind of nostalgic shoes? It looks like they're loafers and things like that.
Yeah, they're very similar. I think that's why Crocs acquired them. They're very similar in the casual footwear. Obviously, they have a little bit of a different look. Before the acquisition, they had a very similar margin profile. They were growing well. And then Crocs acquired them and they pushed them through their own wholesale channels. And I think they got, inventory got a little bloated. And so, you're working through that over the last year and a half or 2 years. We think, you're kind of getting to the end of that growth decline story. And maybe this year you'll see that turn around.
Do you have any kind of a handle on Crocs? How much of their revenue would come from people buying them for workwear? I mean, we've heard in the past that medical professionals, for example, have found them very comfortable.
Yeah, we don't have the exact numbers on that, but yeah, you're correct. They are different, working, shoes. I think, even some restaurants allow their waitresses and waiters to wear them. And then, like you said, in the medical field, a lot of the medical field wears them as well. I don't have exact numbers on that, but it is definitely popular in both of those industries. And
then you talked about the margins, the fact that they're just made from rubber, molded, I guess, in some way. That makes the shoes cheaper to manufacture?
Yeah, so they have, roughly operating margins, 25% range. Obviously, you've seen a little bit of decline since the Hey Dude acquisition. I think they peaked, during the pandemic at over 30% operating margins, which is pretty impressive. You've got Nike in the mid-teens. Lulu, who we just talked about, is got pretty good margins, but not even quite to that level. So, yeah, I mean, it's impressive. You wouldn't think of Crocs as being a high margin business, but because of the way that they're manufactured, they have best in class margins.
We had better jump. Thank you very much indeed for joining us, Zachary.
Thanks for having me.
Zachary Warring, equity research analyst at CFRA.